Welcome back to Royal Blu FX. In today's video, we're going to talk about the strategy. It's very simple and yet effective if you follow it all the way through. This strategy only involves supply and demand zones. Okay, so I'm going to talk about it really quick here and draw it out, and then I'm going to go and show you here on the live chart in a few minutes. So the way this works is, right now we're on the 4-hour time frame. Okay, it actually doesn't really matter because I'm just going to be drawing it now. But the way this works is when you see a demand zone or supply zone, let's just do this for example. I'm just going to draw something out like this, right? When you see anything like this, whatever, supply, demand, supply, okay. Every time when when price comes down to the 4-hour, say, demand zone and supply zone, okay, or whatever, right there. Okay, when price gets there, usually you should pair the 4-hour with the US 30 or any pairs that you like. But I like the US 30 or a lot of the indices because the indices move really fast and they're very volatile. So when the US 30 opens, most of the indices just start running, bearish or bullish. So in this case, you would need the 4-hour and supply and demand with any of the indices. Okay, so of course this can work with any of the USD pairs or GBP pairs and all that, all the major pairs, of course. But again, I'm just only specifying the indices because they move so fast and they're very volatile when price opens. So the way this strategy works is, you're only going to trade, okay, when price arrives to your supply or demand zone, okay, your demand or supply zone. So let's just say price was here at the time, okay, and then when US 30 opens, my time is 6:30 a.m., which is Los Angeles time. That's when US 30 opens, New York time, or 9:30 a.m. when New York opens, okay. And when price gets to the supply zone here, on the 4-hour, okay, it has to be the 4-hour, it can't be anything lower, price will tend to move aggressively away from the 4-hour, okay, because price has reached a supply zone, or yet it's resting at the supply zone, and price is going to aggressively move. Okay, now it may not move, really quick in terms of, from the higher time frame supply zone all the way down to the 4-hour demand zone or what have you, okay, but it's going to move just enough so you can make money that day. Okay, same thing here, right? So when price is all the way here, right, price reaches a demand zone, you're only going to be buying on the 4-hour, or let's just say when price reaches the 4-hour demand zone. Okay, and then when New York opens here on the demand zone, be ready to look for buys, or at least to look to buy when price reaches the demand zone, because price is going to act aggressive away from the demand zone. Okay, so this strategy doesn't mean that you should enter and then hold to the nearest high or to the nearest low. This just means that you should be able to make money based on the supply and demand zones on the 4-hour, because the 4-hour is greater. Now, a little theory behind this. Why am I telling you the 4-hour and not the daily? That's the only reason why, is because the 4-hour is just enough for the 30-minute time frame to react when US 30 is open, when the New York opens, because when you go on a 30-minute time frame, the sessions don't go that fast. Okay, so let's just pretend this was the London session. Okay, London session retraced that entire day. Okay, for the 8 hours, and then when New York came, New York acted aggressively from the demand zone. Okay, so what we're doing here is we're trading sessions, the current day session, and what we're wanting to do is trade the current day session's impulse. Okay, so when price gets to the demand zone, we want to trade the impulse of that current day's session, which means like I mentioned, the session is going to act very aggressive from the demand or supply zone. Okay, so I know this wasn't probably the best illustration, but I'm going to show you guys here on the on the live chart example, and you'll get the gist of what I'm actually saying. Okay, so I'm going to go ahead and toggle. Oh, I don't even have it here actually. Let me go to the here. I'm going to go here to the indicators charts. There we go. Ooh, this is too volatile. Or not volatile, I mean, it's too busy. Let's do this, get this. All right. We got to see New York is at 9:30, right there. Okay, so I'm going to go and delete some of this right here and show you on the replay how this works. All right, so let's go on the 4 hour, okay, and let's go ahead and just mark any supply zones that we see and demand zones, because this is where price is most likely going to react from. So we're going to go here, and we're going to go here. This is also a demand zone, okay? And this type of trading is more of a nonchalant trading. It's, you know, you're not really looking at where direction is going, because you know where price is most like. When price gets to that supply or demand zone on the 4 hour, the sessions will react from these supply and demand zones. So if I go here on a 30-minute, notice how big the sessions are. This is all New York. New York sells off, buys, sells off, right? That's as far as the sessions go that day. So if you're, and notice how impulsive they are, right? Look at all that bearish impulsiveness, right? Look at that bullish impulsiveness. Look at this bearish impulsiveness, right? Look at this bearish impulsiveness here, right? There's a lot of impulsive moves, like right here, right there, right? Everywhere. I want to show you guys how to be able to catch these impulsive moves, right? So watch this. So let's just get to, okay, oops, excuse me, this went right through. Okay, so let me go to 9:30. I think this is not, oh no, 9:30, no, this would be 6:30. Yeah, so 6:30 is here, okay. So here we are. Let's just go right here, okay. So I told you guys that when price gets here to this demand zone, you would look for buys, right? So watch this. We're on the 4 hour. This is the 4 hour low, right, on the demand zone. So if we're here and we see price broke, normally ideally you'd want for price to respect the demand zone. If price doesn't respect it, then, you know, I would probably forget about it. But watch what happens here, right? Price obviously goes off, but it doesn't respect this. So this would be, I would mark this off because price broke the low here, right? So I wouldn't be actually buying into this. So let's continue. All right, let's continue. So we see, we're going to go and fast forward this to a 9:30, which is 6:30 actually. Let's go here. Is that 6? There's 6 p.m. right here, as you see, okay? And then right here is where we see a supply zone, right? So if we see a supply zone, this is the 4 hour, we see a supply zone, right? We're going to be able to see a reaction coming from there. So let's go down on the 30 minutes, okay? And it looks like, excuse me, it looks like the market actually took off from here. So this would be your demand zone from here, right over here, right? Let's go back on the 4 hour. I don't know what happened here, but let me just bear here with me. Right here it says 6 a.m., excuse me. That is 2, so I'll be here on the 2 next time. Okay. Let's go back down to the 30-minute. Bear with me, guys. This is not going to work out because that's not the open. The open was down here. Because I was waiting for 6:30, I thought this would be the 6:30 price would push down, but you know, since higher time frame gives me different time, the time jumps forward a little quicker. So I need to wait for a 2. There's a 2. Okay. So here's a 2. Okay, let's go now to the lower time frame in a second. Here's the 4 hour demand zone, right? When price gets here, we're going to strike bullish here. Okay, let's continue. Okay, did this even? Nope. There's 6:30 here. There's 6:30 here. Okay, so let's see what happens. Okay, and there you have it, guys, right there, right? So this is what I'm talking about. When you get here, you're going to get this impulse. Now, what I ideally look for is for price to be in the demand zone for the buy already, or for price to come quick with one entire candle and then move price bullish. Okay, so this would have taken you, say, let's see, an hour, 2 hours, about 2 hours, maybe even 2.5 hours before you even strike from this demand zone, right? So you would have this profit already in this trade, right? So let's see how many pips that would be. From here to here, right? This would be about 3,710 pips, right? And that's on a 30-minute, right? Remember what I'm trying to say is I'm trying to match the 4-hour supply and demand zones with the 30-minute New York session, okay? Because the sessions don't move, you know, from say this low all the way to this high here on the 4-hour high to the from the 4-hour low to the 4-hour high. I know they're only going to move from the supply and demand zones from the 4-hour, okay? So let's continue again. So we just made money. Let's go to the next one. Right now this is 2 p.m. Great. Okay. So where else do we see a supply zone? Right there, right? We also see a demand zone, right? So wherever price gets to first is where you're going to be able to target, right? There's 6:30 right there, so you can see 6:30 just opened, right? And then there's 6:30 right there for the sell. Now this one would have been a loss. That's no problem. Okay, you're not going to win them all. But like I said, ideally, I'd like for price to get to the supply zone and then strike. Let's continue. Okay, this is actually a 2 right there. Okay, so I see a supply zone coming here. There's nothing in here. So maybe this whole entire day, I'm just going to miss the next session because because price did not get to my supply zone yet. And I don't see other demand zones other than down here. Okay, there's 14. There should be 18. There should be 22, then 2. Okay, so we're nearing this supply zone, right? We're ready to look for entries. Let's go here. Okay, that is 6. Okay, that's 6:30. Okay, we saw this on the 4-hour, I believe. Let me just clarify here. This is a demand zone on the 4-hour, so we're going to go here. Okay, let's just wait. There we go. Boom, right? There we go. So you would have had two entries here. There's your first buy, and there's your sell. Excuse me. Okay, so notice again how the open happened, right? We saw this on the 4-hour right here. There's a demand zone. There's a supply zone, right? We were waiting for this one the whole time. So you could have either taken the buy here or the sell, right? Either way, you would have had a win, right? Let's look at number 30 again, right? Remember, this would be 30. This would be an hour. This would be about an hour and a half, maybe even 2. Depends on how far you hold it. The ideal TP would be the current high. Oops, excuse me, this is wrong. Hold on a second. Look like I'm about to edit films here now. The ideal move here would be, the ideal TP would be where you buy and target the current high. Okay, so given that this is the 30-minute, okay, you'll be buying here, TPing at this high, at minimum at this high. This would be what? Let's see, target here, enter there. There's 2,203 pips there, right? So you're good for the day, right? So this is what you would do every single day. You go on the 4-hour chart, mark your supply and demand zones, wait for 6:30, and then wait to see if you're at a supply or demand zone. And if price is at the supply or demand zone, and if it is, then you can strike accordingly, okay? Here's your 2, okay. So there's your supply zone there. I don't see anything here. Price, the only supplies I see is there. The only demand I see is here. So this may not be a good trading day. Let's see what happens. Oh, okay, price actually moves. Let's see, go on a 30-minute here. Price moved pretty fast, so this could be a sell still. There we go. There we go. Right there, right? So 30 minutes, right? 6:30. 7:30. So this ran pretty nicely, and there you go. There's your next sell, right? Entry there, TP at the current low of the 30-minute, right? So this would have been another win, right, from right here to here. Let's see, right there, right, 4,964 pips, right? So I hope you guys see how this works. I'm going to do a couple more examples just for you guys to get an idea of what I'm talking about here. This is an easy strategy for anybody that could utilize. Okay, right here we have a supply zone, right, on the 4-hour, and we have a demand zone. So let's see what happens. We're striking when price gets to that area, right? So now we're not striking yet. There we go. Okay, so this would have been a loss. No problem, right? We already have 1, 2, 3. Excuse me, 1, 2, 3. I think it was 3, 4 wins, right? 1 loss. No biggie, right? Here it's all about playing the odds, right? Excuse me. Let's go continue playing it from here. Okay, we have 2. Okay, there we go. So now we still have the supply zone here on the 4-hour. Okay, and we have this demand zone. So we're most likely going to be selling it when price gets there. Let's go. Okay, there we go. Right, that was your entire sell. So, oh, excuse me. If you sold here from here, you might not have been able to target the slow, or you might not have been able to make your TP that day, right? Because if you sell it, right, it hasn't gotten there. Obviously, it would have taken you through the Asia session, through the London session, and then another New York session, just to hit this low. In any case, this New York low, this New York here session, is still within this supply zone, so you'd be able to sell still. You'd still be able to sell, at least from the next supply zone, right, like this, and target the slow. All right, price hasn't reached, right? It's all about controlling your trade, obviously. Let's go from here, 22, and here, right? So there's 2 right there. So we're still in the supply zone, right? Let's see what happens. Let's go back on 30, right? You're supposed to look for the sells. So there is 6. Let's see what 630 does there, right? Look at that. 630 went bearish, right? So you would have sold from here, at least break here, right? Now normally I would go on the 1 minute. From the 30, I would enter it from the 30 or more, or from the 1 minute. It doesn't matter because you're just entering. The whole point here is to enter when the open begins. So we know we would look to sell because we're on in this major supply zone here, right? And then from this high to this low, this would be our first TP. Let's see what that would have been. About 833 pips, right? If you wanted to play it safe, you could play it on this flip and target this flip, right? Here, from this high all the way down here.